Hello members, it's LA. It is November 16th, 2014. This is the weekly review. Let me first apologize. I had a little bit of a flight delay getting back today, so to some extent I expected to get this out a little bit earlier, although I knew I'd be a little late to begin with, but not this late. So again, apologies for the tardiness of getting this out to you. Let's look at what happened this week. What do we think probably is going to happen in the following week or so? And then also review the portfolio right quick. So, last week, NASDAQ kind of came to the forefront, pushed things higher. Everything else was pretty much the same. Decent gains on the year. Russell really couldn't move. We're going to talk a little bit about the Russell as we go forward here because that's something to consider. If we look at the technicals, the fundamental picture, the quick review to me, the main thing we saw was rotation. And we saw that rotation take place where the S&P 500 pretty much went sideways. So a week of basically sideways action here. But if you look over at the NASDAQ composite, there you actually had the sideways last week. This week it started to push higher. And that was what kept these indexes from rolling back over and doing any kind of damage to the downside. So technology kind of steps up. Tired Dow Jones, S&P 500 kind of takes a back seat. But we also saw it not just there, but we saw it elsewhere as well. If we pull up the sectors, you can see those sectors that we were talking about probably would see some rotation too. XLB being one of them. The XLK we thought could get some, and then also the XLY. So rotation back to these groups after a little bit of a rest, XLY also, and then we saw others start to take a break and to pull back some, like the IBB, the XLF. These things were extremely overextended, and it only makes sense that they would try to come back. Now, if we're looking at the next week, and we're thinking about, okay, what do we want to see? As we talked about before, if we continue to get a pullback, we want to see these retest regenerates from the highest levels hold. We want to see this market work things off in terms of sideways time versus price. So any kind of a pullback should be bought. If that happens, then we're probably going to see these markets just gyrate up here at the highs. And rather than pulling back, we get something in terms of time versus price. So that's, to me, the main thing I'd be looking at this week and asking myself, okay, how is that going to play out? Is it going to be just time, or are we going to see some price destruction as well? If I look over, the other thing we were looking at last week was the dollar. We wanted to see the dollar trade sideways. It tried to break out on Friday, failed, came back in, had less volume. That suggests this thing is probably going to come back in and do some sort of a retest, regenerate itself off this prior high, which is where support exists. We have a position here, so we're going to try to sell anything up in this area to start the week and try to buy it back down here. So sell up here, buy back down there. That would be the ideal case if in fact it plays out that way. So what would I be watching for in the coming week? I want to see rotation. I want to see this market rotate without a big, huge retrace. And assuming that we do get a retrace, right, I want to see it set up where those highs get bought. In other words, we come back in, we do retest regens, and I'm going to pull this back into the S&P and look at it as an example. So if I'm looking at this and saying, okay, what can happen? We've got the little sideways things going. If it comes back in, I want to see this bought again. It was bought the first time here. I want to see it bought again. So if we come back in here, you want to see it hold, and you want to see that setup do what? Set up this larger ABCD structure. Right now we've got this little one. I'd like to see that set up to where this comes back in, gets bought again, tells me the buyers really are there and they are going to buy it. And maybe we get down into this lower support zone, but they come right in and buy it. That's the sort of thing I want to see take place. to give me the confidence that we're going to get that run right up until the end of the year, maybe into next year. So that's what I'd be focused on. Now, what I don't want to see is I don't want to see this Russell roll over and start to play dead. The Russell had been the best indicator pretty much all year long to the downside. It went up here, this high, breaks over it, and then immediately is doing a retest regenerate. So if I draw that in, I can see right here the Russell is right at the bottom doing a full retest regen off that break to the top side. Now the volumes haven't escalated. There's nothing here yet that tells us, boy, this is going to pull back. But if it does, folks, the target is going to be this bar. And it's going to come back into this swing point high and do a retest regen off of it. So if I'm looking at the Russell, if I start seeing weakness back into here, trading back deeper, there's a good chance we could come all the way back into this area. Now it's not a horrible thing. It's just that it's going to set up a different situation. Right now we got a real tight ABCD structure of the upside. If it comes back in deeper, that deeper retrace, maybe it gets just to the top of this bar, maybe it gets all the way, deep into here, then that's a different ABCD structure. That one is going to take us back up. If you just do this sort of projection there and look at it, that one could take us right back up to the highs if it sets in that way. Right now it tested this high, tested it with more volume, but failed. That says we can go right back and test it again, but if we get a deeper retrace on that ABCD structure on the upside, that would probably target these highs again. So the Russell to me is probably where my primary focus is going to be this week. That's what I would be looking at. If I think about the fundamentals, positives and negatives, to me the most positive things that are out there, oil prices, it's a big boost to the discretionary sector. That's one of the reasons we put on that XLY in terms of the trade. We wanted to see if we could get ahead of possible rotation into that group. And I'm pulling up the XLY now. So I was looking at it saying, okay, if we're gonna rotate, where's we're likely gonna rotate? Well, people probably gonna have more money in their pockets. So the XLY is not a bad choice. And sure enough, some volume expansion going up, testing, getting over the highs. That looks pretty good. If we look at the stocks inside this sector and just kind of go down the group, Comcast is one of them. It's not looking great, big push down, but it got under, back over, less volume. This thing can, range trade. If I look at some of the others like Disney also was struggling, got, hit on the earnings, comes down, but it's still up there at the highs, doesn't look bad. Amazon got hit on the earnings, but now Amazon's starting to rock back to the top. Over in the autos, Ford had been beaten down for a while off earnings. It's starting to move. So you can kind of see the movement starting to take place. Here's, let's pull up McDonald's as another example. Here's McDonald's going up to test the highs again. Priceline had gotten hit pretty bad, but even Priceline, they're all bouncing back up. So even though I'm not thrilled with the way the group looks, there's certainly enough push here, and if we see that rotation as a result of more money in people's pockets given the oil situation, these sectors should benefit. And so I would be looking, if I'm you and myself, for where do I go? These are the places I'd be looking. The other big thing is the central banks, right? The largest that's in the central banks, Bank of Japan, we already know what they're doing. China's got problems economically. There's a slowing economy. They're going to have to continue to try to prime their pump. So China, Britain, they're not coming in and tightening yet. And the ECB, we already know, they continue to try to do what they can to boost demand. Folks, it's pretty much the United States driving the world in terms of economics. I don't see much economics positives in China, in Europe at all. It's really us. And so the banks in those countries have to keep pushing money out. We've got an increased likelihood also here that Prime Minister Abe is going to delay the sales tax, from going from 8% to 10% until probably next year. That's also probably going to be a positive. The negatives on the flip side going forward, post-earnings season showed that the stronger dollar, fast moves in currency have effects. It did have an effect. These are in the notes here, but basically we saw that the large cap stocks that have most of their earnings overseas didn't grow revenues or sales as fast. So the dollar is definitely, in my opinion, having an effect. And if we see more fast moves in the dollar before the end of the year, we're going to see an effect on earnings in the first quarter as a result of that. If the dollar just flattens out, then these things kind of take care of themselves. But if it starts moving fast and furious to the upside, it's a negative. Technically, positives. Right now, the two big, in my opinion, the two big ones here are the SOX and the Russell. Both we're doing regenerates, retest, and regenerates, and so far, we're not taking and giving up those bullish regenerates to the upside. And I'm going in here real quickly to pull up the sectors. I wanted to show you the SOX. I think the SOX along with the Russell are the two big ones to watch this week. SOX has been consolidating for 2 weeks. That swing point high it got over, let me draw it in here. This is the retest regenerate, and so far it has held, and it's been a big test for 2 weeks now with no volume. If this starts to break to the top side, it's going to take out these highs, and it's going to give a nice big push again, and that's going to help the technology sector. So that's a big one to watch. Of course, the other one I already pointed out was the Russell, and we should watch on it. Of course, the other thing, as I talked about, is the dollar. You don't want to see a big fast move in the dollar, and it doesn't look like that's going to happen. The only thing that's or one of the big things, I guess I should say, that's still a negative is we've come a long way in a very fast manner, and we're still at the highs. I mean, we really haven't pulled back at all. And if I take the most extreme example, the NDX, this did a 5-day consolidation and just started reaching back up to the highs. Folks, we've gone from 37 to 42 and a half. That's 500 points. That's 13%, 14% straight up. No pullback. That is a stretched market, even at this point. And so that's a very extended market. We've had 4 weeks now, fast move higher. If I had to just look at the odds, usually these moves last 7 to 8 weeks. That means you're about halfway into the move. Typically, this is where you're probably going to see this market try to pull back. So I would think that the probabilities of a pullback this week into next week are probably the greatest probabilities that we're going to get. And when you look at the calendar, that's also true. You've got about 6 weeks until the end of the year. When you get about 2 weeks into December, you get that Santa Claus thing going on till the end of the year, usually low volume. And if things are positive, it's just a slow grind higher. So that says you got about 4 weeks before that kicks in, 3 weeks before that kicks in. So if you're going to get a pullback, it's probably here. So I would be looking at that as a possibility. The other thing I'm seeing is when I look here at the bonds are starting to show this kind of a rounded rollover type pattern. It looks to me like if the bonds can get up above this swing point high, they're going to easily get back in here and test into this big bar again. If they get into the bar, folks, they're going to try to rack it up, and climb back up to the top. Of course, at that point we'll see this as resistance probably. Actually, we won't. We're not going to get resistance, but it will be resistance at the top of this bar. It won't show as resistance probably because there's nothing congruent with it. But it looks to me like this is starting to get this rounded bottom, and if so, bonds typically go the opposite direction, or at least they have this year, of equities. So if I start to see bonds moving up as well, that's another signal to me that we may get some sort of pullback in this market. Do I think it's going to be big? Do I think it's going to be horrible? No, I really don't. I think just a pullback, I think it would be healthy if it did. What I'm really interested in is what does the Russell do and how does it look when it pulls back, versus everything else. The other thing I mentioned yesterday or Friday, and I didn't actually have my tools with me to draw this, is if you take the bulk of that range that took place back here, right, and it really was from here across, right, that range that was in effect for quite a while, and then we got the breakdown down here, and now we've got the breakout up above. If you take and project that range and just project it on top of this high, that gives you about that far up. That's about an equidistance, and we kind of got almost to the top of that range. So it looks to me like that range trade, the bulk of this range in here was projected forward. We kind of hit that top. So that's also, kind of an ancillary, here's another thing that's kind of not a negative, but, we hit the projections. We got up to the top of the bulk of that range, and therefore we could see a pullback just off the fact that we've done that. The other thing, of course, on the negatives, that immediate retest regen I've already talked about with respect to the Russell. If I look at the world markets, there's really no change. World markets, it's still ambivalent. There's still range trading right across the board. Negative in terms of their earnings, not the earnings, but the economics. If we look at the economics itself this week, you're really going to have two things that stand out. You're going to have more central bank stuff. You got FOMC meetings. You got the meetings out of Britain. You got the Bank of Japan announcement here, and you got meetings notice out of Australia minutes. Flash PMIs, there's a number of them this week, mostly concentrated on Wednesday and Thursday. Some manufacturing indexes in there as well. So that it's going to be a lot of data again this week. I think geopolitically, Russia is the biggest problem. Putin, the ruble plummeting, I think this is an issue. He's kind of backed into a corner, and I suspect he's going to continue to agitate in the Ukraine. If I had to say what the bottom line is, to me, all indications suggest that we're going to get some sort of a consolidation continuing, and we may just levitate up here for another week. We may get no real deterioration, and if we can do that for about 3 weeks, and we're about week 2 now, we probably could just move on higher from there without any kind of a pullback. So that's a possibility. The other is I believe that there really is an increased risk that we're going to get some sort of a retrace this week, late this week maybe, anytime this week really, and potentially into next week. I think the timing is right. The trend characteristics, if I look at the overall trends of all the stocks in the market, they're hugely bullish now. Usually when that happens, that's about the time you're going to get a pullback, and then that rollover potential in the Russell. So again, I suspect whatever retrace we see is going to get bought, and that's what I'm going to be looking to see happen. That's going to give us the clues that we need to know that more than likely we're going to get that run right up until the end of the year and potentially into next year. So that's what I would be looking for. Portfolio-wise, last week we increased our holdings. We got some more positions on. If you remember, we put in a couple of those young guns, I called them, MFRM we got into, PCTY. We were already into one with Zeltique. We've increased our net long positions. And what I would like to do is, let me see, did I write this right? Yeah, these are old. I was using an old, let me take these out. This is old actually. Let's just move to the stocks. So we did get in. What I would be focused on this week is, do we get a pullback? And if we do, we're going to want to use that to increase our position size again. We don't have, we don't have a terrible size. Actually, our size isn't too bad at all. We've been able to put on some positions, which is what you'd want to do and what we were able to do. If you remember, we focused on getting into some positions. We were able to get into these two and actually take some quick profits on them which is a great thing. I mean, that's the sort of thing that you want to do. Let me take and just quickly get over to the other screen here and show you what, just highlight 2 or 3 of these. So if I pop over to the portfolio, here we go. So on the open trades, we're sitting at about, I think about 41% right now, and that was after we took some quick profits. If we look at some of these positions, you know, these 2 that we just put on, they look great, and you might say, okay, why did we take positions off? Well, if you get a fast move like that, you know, 5%, 4% in a day, you just got to take some of the money. Yeah, I want to be in these longer term, but I want to get that money in my belt, especially with the potential for some sort of a larger market pullback, right, which will bring these back with it. These are high betas, so they're going to move around a lot. So we'll want to try to get back in these on any kind of retrace, or allow them to do their full extension, which is what we were looking for when we got into them. Allow them to do the full extension, finish off the ABCD structure, and take the rest of the profits up at those higher prices if it just continues straight up. So that's what we're looking for here in Mattress Firm. That's also what we're looking for in the other young gun, Palo City, which is got a nice run going too, another ABCD structure. We took some off a little bit early here, but we actually had a little ABCD that we were looking at that we wanted to take money into. We got the larger ABCD structure that if this one actually continues up, we'll want to take the rest up there. Same idea. If it goes straight up, take the money. If it comes back in, add some more to it. If we look at the others, we already looked at the socks, so you already saw what that looked like. And I'm taking and looking here to see if there's any others that I want to pop into. What I want, none of those. I mean, Zeltique, you already know. We're going to try to take some. UUP, we already talked about. The others, we want to allow them to extend. DXJ, let me quickly highlight that one. With the Japan doing what they're doing, we want to sell into a spike, into this spike high. So a little bit more, we'll try to take some profits. I want to highlight 2 other trades. I've been looking a lot at those stocks that are influenced by the wearables. One of them is Skyworks. You know, on a weekly chart, let me pop up the weekly here, this looks pretty good. And so any kind of a pullback on this would certainly look to me to be a decent buy. If we look at the daily chart, it doesn't look all that exciting. You know, big volume spike down here, got big spike up. This, I'd have to check this. I didn't check to see exactly, but I think this was an earnings spike down. A pullback into here, Skyworks might be worth it. That's in the wearables. Another one in the wearables, and what I'm talking about is like the Apple Watch and the Google and Samsung. All of those are going to go into it. I'd be interested in the picks and shovels guys again. And these are picks and shovels guys. And I like the way, in particular, I like the way this one is consolidating. This is NXP Semiconductors, consolidating here at the highs, just up underneath this, got over it, pulls back, doing a retest regen. It looks like it's going to hold. You may see me try to pop into this one immediately come tomorrow. Weekly, same sort of thing, goes over a swing point high. It looks to me like it's going to get over it next week. And the monthly also, if I pull it over, you can see how strong it's been. So I think those are 2 stocks we should watch for any kind of an entry to get us in another semiconductor in a sector that could turn out to be a long-term winner. That's what we're always looking for. Even though we take trades most of the time, unless we're taking the indexes, most of the time we're trying to, you know, find something that, yeah, it's a trading position, but it could be a long-term hold as well, could turn into that. Okay, well, that's a quick wrap. Again, apologize for being a little late on it, but I think that gives you a good feel for what's coming this week. This should be a week that we maybe see that pullback and allow us to, you know, beef up, get us up to 70, 80% invested versus, you know, the 41.50 that we were at earlier before we sold out of a little bit of those 2 positions. Thanks a lot. And as always, I'm here to help you. If you've got anything, just drop me an email and I'll be there. Take care. Thanks you.